Hi everybody, it's Mike DiVita. I want to thank you for joining us on another one of our videos. Today I want to talk about interest-only loans. Now, when I talk about interest-only loans with people, I generally get a negative opinion right out of the gate. And it's because they generally don't understand this type of loan product. So today I'd like to explain that to you. I want to make sure you understand the loan, how it works, so you can make the decision on your own. Now, this is what I want you to take away from this presentation. Interest-only loans offer a lot of flexibility, which can in turn turn into opportunity for you. And I'm going to explain that later on in the video. Now, I'm going to flip right to the whiteboard so we can look at the math and see those numbers. I'm going to compare two loans. Let's take a $600,000 30-year fixed at 4.5%. Now, that's going to have a principal and interest payment of $3,040. So every time you make that $3,040 payment, the balance on the loan goes down. Now, let's compare it to a $600,000 10-year fixed at the same rate of 4.5%. It's got interest-only payments, and that payment's going to be $2,250. So this is where the flexibility is that I was talking about earlier on. You know, the payment is $790 less than the fully amortized loan, and you can use that money to do whatever you need to do. Save it, put it into another investment opportunity. But I want to explain the big differences between the 30-year and the 10-year interest-only. Now, you can always pay more on both loans. Now, if you pay more on the 30-year fixed, any additional money over the $3,040 that's due goes to principal reduction. So your balance will go down. But at the end of the month, when you get your next bill, you'll still owe the same amount, $3,040. The interest-only loan is different. You can always pay more, and anything you pay over the interest-only payment goes to principal reduction, similar to that 30-year fixed. But the next time you get that bill, the payment is going to be slightly lower because it's interest only based on the remaining balance. Okay. So say, for example, you decided to pay $3,040 on your interest only loan. So the same payment as that 30-year fixed. So you'll actually pay the loan down $790. And the next time you get your pay coupon, it's going to be $2,247. So only $3 less. But over time, say you did that for 10 years, that adds up and that payment will go down drastically. So the point here is to take away two things. Number one, the interest-only loan offers a lot more flexibility. And number two, because of that lower payment, there's opportunity there. You can take that money, put it into your savings, put it into another investment vehicle. So, this loan isn't for everybody. I'd like to talk about somebody who might be a good candidate for a loan. Now, there's people out there who, work and they get their quarterly bonus. Maybe they get an annual bonus. And, maybe they like that flexibility of having that lower payment during the year. And at the end of the year, they can take that big bonus check they have and apply it to the mortgage. I had a client who did this. He would pay $100,000 down every year at the end of the year when he get his bonus. So, let's take $600,000. If you paid it down $100,000, the payment would actually drop from $2,250 down to $1,875. So, you can see you could pay off that mortgage in 6 years if you were doing this every single year. Now, if you're a W-2 employee and, you get the same paycheck every 2 weeks and you don't get those bonuses, I'd probably say the 30-year fix is a great mortgage for you. Every time you make your payment, the principal is going down. But if you're the type of person who needs that flexibility, maybe you get commissions and that varies. It could be $5,000 one month and $30,000 the next month. The interest-only loan might be a fantastic loan for you. Now, if you'd like to talk about these options, you can always reach out at 1-800-239-1103. My email is mike@mycahomeloan.com, or click on the Get Pre-Approved link. It will allow me to understand your situation. I'll get back to you same day, and we can talk about whether an interest-only loan will be a good fit for you. Now, I want to thank you for joining us today. If you have any questions, please reach out and make it a great day. Thank you.